It is time, and I would like to check in the presence of all the panelists. I can see Mr. Rakesh Gupta, Mr. Singhania. Fine. Indra Mohanji. Indra Anandji from the Tata Group. Yes. I've seen all the other people around. Sanjay Mangal sir, Limatullah. Madam Rama Matthew, please.
I'm here. Can you see me?
Yes, ma'am, we can see you. Ma'am, I think it's time and we should start. Good morning to all. The Directorate General of Taxpayer Services, Mumbai Zonal Unit, welcomes all the speakers, panelists, officers, and participants to today's webinar on the topic Indirect Tax Proposal in the Budget 2023-24. India has arrived, and the world is looking at the Indian budget. The approach, the way they look at it, that differs. Some look at it as if how a rupee comes and how it is spent. Another person may look at the gains or the profits in the personal income tax. Some other may look at differently. Our approach in the presentation today is essentially about what the changes are in the indirect taxes and how a trade can benefit from these proposals, and also to deal with the doubts and seek clarifications. I hope all the people who are here, they would like to use the chat box, put in their questions restricted to budget only. These changes, how they are going to help the trade and industry and how they are beneficial, that would be explained by a core team of the which worked on the draft proposals in making this budget. With this forward, I take the opportunity to introduce today's speakers. We are privileged to have amongst ourselves Member Tax Policy CBIC, Mrs. V. Rama Matthew, Madam, a 1988 batch officer who joined the department after completing her graduation from Delhi University. She had a distinguished career where she worked in various formations like DRI, GST Intelligence, Vigilance, Mumbai Airport, and NASIN, where she trained more than 200 probationers, me and Limatullah included. We are privileged, ma'am, to extend a warm welcome to you, and we would request you to address the participants. Rama Matthew, ma'am, please.
Good morning, all. I hope I'm clear. I'm hoping clear and audible. We get that sorted first. Okay.
Yes.
I will be brief because Lima and Sanjay Mangal, my colleagues, will be actually making a presentation on the details of what the budget has been as far as indirect taxes. Can you hear me? So, briefly, we are looking at the changes in two parts. That is, one in the GST part and the other in the customs part. The GST part, we are essentially implementing the decisions of the GST Council, and they are concerned mostly with simplification of the and rationalization of the processes, facilitating ease of doing business, decriminalization of certain offenses, and rationalization and compounding of offenses. We are also talking about bringing clarity to what is called OIDAR, that is Online Data Access and Retrieval Services, enabling of information sharing, and bringing clarity to e-commerce and that of corporate social responsibility. That may not be possible. Very happily received, but there's clarity to that thought process. The second part would be the changes in the Customs Tariff Act, where we have actually rationalized the Tariff Act itself and brought it in aligned with current business practices, current, I would even say, the current industrial and trade requirements and aligning it to the WCO. The tariff changes talking about, there have been changes in the Customs Act and the tariff. There the approach has essentially been for the rationalization of the basic customs duty structure. We had a pretty massive spread, about 21 rates. We have shrunk it to 13. We'll try and bring it down to more in the next budget that we shall see. We corrected the inverted rates of duty and brought about ease of doing business. We have taken up the periodic review of exemptions, and that has again that has been a fairly massive exercise. We're still working on more of it, and we have brought improvements in the dispute resolution mechanism. Very simply, these are the issues we'll be addressing. I will allow Sanjay and Lima to make their presentations, and after that we can have a conversation on the details. I'm seeing the questions are already on the detail, but let them make the presentation first. Some of it will be clarified in the course of their conversation. Then we will take the questions. Sanjay.
Thank you, ma'am, for giving a broad overview. If you'd like to say anything more, or should I invite a presenter?
I think we can invite the presenter and then we can have a conversation at the end of that. It may be more constructive.
Yes, ma'am. Yes, ma'am. Now, with this broad overview by Rama ma'am, I would invite Limatullah. She's a 1996 batch officer, but just as I mentioned, we trained together under ma'am. And Limatullah Yaden, she's working currently as the Joint Secretary TRU, the prestigious post, and she is a BA LLB with PG DHEP. It's a postgraduate diploma in healthcare, and she has worked extensively not only in the department but even outside in other ministries. With this background, I would request Limatullah to kindly take up the central excise and customs parts of the budgetary changes. Lima, please.
Good morning to you all. Respected member, ma'am, Rama ma'am, member TP, Shri Sanjay Mangal, Principal Commissioner GST Policy Wing, panelists, Miss Indra Anand, Mr. Anand Singhania, Mr. Rakesh Gupta, our senior colleagues and other colleagues in the field, and our partners in the who have logged in. I am lucky to be going in after today because actually most of you would have actually sort of gone through the budget papers, analyzed it. Ma'am has already given you a broad overview, but I will run you through the changes that we have made. And then as ma'am said, at the end, if there are some doubts, we'll discuss. Okay, just give me a minute. I'm trying to share the PPT, so it's taking some time to connect. Okay, can you see the presentation?
Yes, ma'am.
Yeah, okay. So, so if you see the budget changes, this can be clubbed into 4 broad areas. One is customs duty, where we have done some rationalization of, basic customs duty rate structure. Then we have also done some changes in duty rate. Then the second part is where we have done the review of customs duty exemptions. The third part is covered under the legislative changes, where we have carried out some amendments to the Customs Act and the Customs Tariff Act. And the fourth one is the changes carried out in central excise duty, particularly NCCD and excise duty exemption. So the thrust of the budget changes, as FM has already highlighted in the speech yesterday. One was to move towards simplification of the tax structure. This is basically aimed at reducing the compliance burden and promoting the ease of doing business. And all the duty concessions, in a way, are aimed at achieving our Atmanirbhar Bharat. So it would be promoting domestic manufacturing, deepening value addition, reducing input cost, correcting inverted duty structure, and also promoting exports and sharpening export competitiveness. So when we come to the rationalization of basic custom duty rate structure, as ma'am already said, the rates over the years had sort of spread and increased to over 21 rates. So the current exercise, what we have undertaken, has resulted in reduction by 8 from 21 to 13. So as a result of this rationalization exercise, there has been marginal increase in the BCD rates of styrene, vinyl chloride monomer, toys and parts of toys, that is other than parts of electronic toys, bicycles, automobiles in SKD and CBU form, NAFTA. Of course, silver bar and silver dore rates have also been aligned along with gold rates. Then we have also calibrated the BCD, the AIDC and the SWS rates to sort of maintain existing incidence of customs duty on gold, gold dore, platinum, coal, peat and lignite. Similarly, the BCD and AIDC on aircraft has been recalibrated while maintaining the same incidence of duty. So I would request everyone to look at the changes in the AIDC and the SWS rates for effective rates. I'll just run you through the changes in custom duty rates. In the chemicals and petrochemicals sector, we have reduced BCD on denatured ethyl alcohol from 5% to nil. This is for use in the manufacture of industrial chemicals, and it is through IGCR route. We have also reduced the BCD on acid-grade fluorspar from 5 to 2.5%. Then the BCD on crude glycerin has been reduced from 7.5 to 2.5 for manufacture of epichlorohydrin through IGCR. Then we have increased BCD on naphtha from 1 to 2.5, styrene from 2 to 2.5, and BCM from 2 to 2.5%. Then the precious metals, you will see that we have basically, apart from silver bar and silver dore, the incidence of duty continue to remain the same. The import duty on gold, dore and bar and platinum were increased last. So if you will see, we have just rejigged the AIDC and SWS, and the effective duty continues to be the same, barring silver and silver dore. If you, we have also increased the import duty on articles made of precious metals from 22% to 25%. This was on the request of the jewelry manufacturers to give them the requisite differential of 10% and 9.25% in the case of platinum. Then we are, and to ensure that there are no issues of misclassification, incidentally, we have also increased the BCD on imitation jewelry from 20% or 40 rupees per kg, whichever is higher, to 25% or 600 rupees per kg, whichever is higher, but they are being exempted from SWS, so that the effective rate remains on what you see on the screen. For export promotion, we have focused on reduction of BCD on seeds for manufacture of rough lab-grown diamonds. Then we have also reduced BCD on certain key ingredients inputs for manufacture of aquatic feed. This was basically to sort of give a boost to the export competitiveness of marine exports. I'm not reading them because they're available on the screen. Then in the electronics and consumer goods sector, we have reduced, this was basically, if you see, most of them are to deepen value addition. So the BCD on lens for camera module has been reduced from 2.5% to nil. Then we have extended exemption from BCD to specified chemicals for manufacture of pre-calcined ferrite powder, as is already available for ferrites. Then to palladium tetraamine sulfate for manufacture of parts of connectors, as is already available for connectors. Then BCD on parts of open cells panels reduced from 5 to 2.5% subject to IGCR. To correct inversion of duty, we have increased the BCD on electric kitchen chimney from 7.5 to 15%, and the heat coils for use in the manufacture of electric kitchen chimney, we have reduced from 20 to 15% subject to IGCR condition. In the automobile sector, owing to rationalization, the BCD on vehicles in SKD and CBU form has marginally increased. So if you see, BCD has increased from 30 to 35%, but we have exempted it from SWS. So the total effective increase is 33% to 35% on SKD and 66 to 70% on CBU. Another novel thing that has been done in this budget is to sort of help India, to develop India into a global hub for testing and certification. We have given exemption from BCT to vehicles, specified automobile parts, components, subsystems, tires, when they are imported by notified testing agencies for the purpose of testing and/or certification, subject to specified conditions. Then on capital goods, we have extended the capital goods exemption on capital goods and machinery for manufacture of lithium iron cells for batteries used in EVs, as is already available for lithium ion cells for batteries used in mobile handsets. Others, again, this is also a part of rationalization. So we have marginally increased the BCD, the effective duty remains still lower, but the BCD has gone from 30 to 35%, but we have exempted from SWS so that the effective duty remains at 35%, which means increase of just 2%. Similarly, on toys, we have increased the duty BCD from 60 to 70, but we have exempted from SWS so that the effective duty rises only from 66 to 70%. Then we have increased the BCD on compounded rubber from 10% to 25% or rupees 30 per kg, whichever is lower, at par with natural rubber to avoid circumvention of higher duty on natural rubber. We have reduced BCD on pecan nuts from 100% to 30%. Then we have also provided exemption on import of warm blood horse when they are for training by outstanding sports persons to 30%, and they are subject to existing conditions as is available for other sports equipment and goods. In review of exemptions, as you would all know, in 2021 budget, a subsection was inserted to ensure that no conditional exemption has a validity of more than 2 years unless they are varied or rescinded within that time. So as part of the review, there were 196 exemptions that were taken up. We are extending 140 exemptions, which includes entries in notification 50 of 2017 and standalone exemptions, which for 1 year, but this would be taken up for review this year. This we have extended pending review to avoid any disruptions in supply chain and as a trade facilitation measure. Out of the remaining, some are being extended by 5 years, 2 years, and 1 year. The list of these notifications are already given in my DO letter. Legislative amendments, we have 2 amendments to the Customs Act. The same subsection which provides the validity of 2-year clause for conditional exemptions actually does not apply to the kind of to the listed category. So we have inserted a proviso to specifically exclude such listed categories from the purview of 2-year validity clause. Then a new subsection has also been inserted to specify a time limit of 9 months from the date of application for disposal of litigation by the Settlement Commission. This is to align with the Central Excise provision. amendments to the Customs Tariff Act. We have amended Section 9, 9A, 9C of the Customs Tariff Act in wake of recent litigations so as to provide clarity. And it will now, if you go through that, it is also in synchronization with the rules, because the Act and the rules, if you read together, the changes that we have proposed will now read in harmony. We have also amended chapter 90, heading 9801, which deals with project imports, to exclude solar power plant and solar power project from the purview of project imports. Then we have also, as ma'am said, we have also carried out amendments to the first schedule to the Customs Tariff Act to align the headings or the abbreviations with the HS 2022. Then new tariff lines have also been introduced. This was based on the request of trade as well as line ministries, so that there is a better identification of products. So these are basically mostly millet-based products, mozzarella cheese, medicinal plants, pesticides, telecom products, synthetic diamonds, cotton, fertilizer grade, etc. The first schedule to the Customs Tariff Act is also being amended to modify the tariff rates as part of our rationalizations exercise. The second schedule, which is the export tariff, is been amended just to align one heading covering groundnuts with that of the first schedule. In central excise, we have just revised the NCCD rates. I'm not reading out because this is available in the pink book in the GSTU letter also. Then finally, central excise duty exemption has been issued to exempt excise duty on blended compressed natural gas from so much of the amount as is equal to the GST paid on biogas contained in that CNG. This was to ensure that there was no tax on tax. Thank you.
Thank you, Lima, for a very comprehensive presentation, because tax changes involve so many things, covering them up and giving the rationale behind it. Thank you for such a for such a comprehensive presentation. With this, now I'd like to invite Shri Sanjay Mangal sir. He's Principal Commissioner, GST Policy Wing. Those who have been attending our webinars have seen him frequently on this Mumbai DGTS webinars. He has been gracious. He has always been agreeable to come and speak on the topics. Sir is a 1992 batch IRS officer. He is a science graduate with an MBA. Sir, I would like to invite you to kindly talk about the changes in GST and other aspects of budget which you may feel fit, sir. Sanjay Mangal, sir.
Thanks, Rajesh, for giving another opportunity to be present with the trade and industry and the officers, and to share the views and to address the queries wherever possible. So, good morning, everybody. I will be taking up where Lima has left, and I will be taking up the budget proposals pertaining to GST. I will share a short presentation. I hope it is visible on the screen.
Yes, sir, we are able to see it.
Yeah. So my presentation will cover the amendments which are proposed in CGST Act and IGST Act through Finance Bill. As everybody knows that proposal in any amendment in CGST or IGST Act can be done only based on the recommendation of GST Council. So all these changes have been recommended by GST Council. Pertaining to GST law are mentioned in clause 128 to 144 of the Finance Bill. And these amendments will come into effect from a date which will be notified in coordination with states and UT with legislatures. So this is a standard practice every year, and this will continue this time also.
Sir, sorry for interrupting you, sir, but if you could be slightly louder.
Sorry.
Thank you.
The main emphasis of the amendments is, as Rama ma'am has already mentioned in her opening remarks, is to facilitate trade, improve ease of doing business, reduce litigation, decriminalize GST laws, and streamline compliances under GST. So I will continue with the individual amendments. First, I will focus on the amendments which are for trade facilitation and for reducing litigation. There is an amendment in section 132, which is for decriminalization of certain offenses under GST. The amendment mainly they are focusing to decriminalize certain offenses which are specified in clause G, J, and K of subsection 1 of section 132. And these offenses are mainly obstructing or preventing an officer in discharge of his duties, tampering or destroying material evidence or documents, failure to provide information and to provide false information. So these for these offenses now no prosecution will be done under GST Act. Another major step is to increase the monetary threshold for launching prosecution for various offenses under GST from the present 1 crore limit to rupees 2 crore limit. So this limit, monetary limit, is being doubled for launching prosecution. However, this limit of 1 crore is being continued for certain offenses which are considered like very critical, like issuance of fake invoices. Mainly, it is the issuance of fake invoice, which for which the threshold is still will still continue as rupees 1 crore. With these steps, it will be a major step in ease of doing business, will reduce criminalization of offenses under GST. Next related step is to make the compounding provisions more attractive. This is related to decriminalization only. And the amendments are being done first mainly to rationalize the amount of compounding of various offenses under GST. So the minimum as well as maximum amount of compounding has been reduced by amendment to section 138. Presently, this amount is 50%, minimum 50% and maximum 150% of the tax amount. This has been reduced to minimum 25% and maximum 100% of the tax amount. Besides, in earlier provisions of section 138, compounding provisions were not allowed in respect of offenses which were also offense under any other law in force. So now that condition has been removed. So compounding will be allowed in respect of compounding in GST will be allowed in respect of offense under GST. It may be an offense, separate offense under any other law, which will be dealt in terms of that law separately. Third step is being taken that in tune with the amendment in section 132, where for issuers of fake invoice, the threshold is being kept at 1 crore only. Here also, the persons who are included in issuance of fake invoice and their masterminds, they are being excluded from the compounding provisions. So taken together, these provisions will encourage the persons to take benefit of compounding provisions under GST, and this will result in quicker settlement of cases, help in reducing litigation. Next step is facilitating composition taxpayers to take intrastate supply of goods through ECOs. So you will recall that GST Council has taken in principle decision to allow unregistered taxpayers as well as composition taxpayers to make intrastate supplies of goods through ECOs. So in respect of composition taxpayers, there was a requirement for amendment in section 10. So that amendment has been proposed through finance bill. And now through this amendment of section, there will be no restriction on the persons supplying goods through the ECOs to opt for compounding provisions. So in effect, composition taxpayers will now be able to make intrastate supply of goods through e-commerce operators, subject to certain conditions which will be separately notified through the notification. This will facilitate such small taxpayers who have opted for composition scheme to supply intrastate to make intrastate supply of goods through ECOs, and this will bring parity between online and offline suppliers and will promote e-commerce also. Next amendment, which is for facilitation of trade, is retrospective applicability of para 7 and 8 of Schedule 3 of CGST Act. These para 7s, 8A and 8B of schedule were inserted in Schedule 3 of CGST with effect from 1st February 2019. And they provided certain activities or transactions which are specified in those paras to be treated neither as supply of goods nor as supply of services. So as these provisions were effective from 1st February 2019, there were doubts regarding taxability of those activities or transactions. during the interim period of 1st July 2017 to 31st January 2019. To clarify such doubts, it has been decided to apply these para 7 and 8 of Schedule 3 retrospectively with effect from 1/7/2017. And this the same has been done via sections 142 of Finance Bill. And consequently, all those activities transactions mentioned in the said paras will be treated as neither supply of goods nor supply of services during the period 1st July 2017 to 31st January 2019 also. It is also being clarified that wherever tax had already been paid during that period in respect of those transactions or activities, then no refund of such tax paid will be available. This amendment will remove the doubts, all the doubts regarding taxability of transaction activities during the interim period, and will help in reducing litigation in respect of the same. Another major step which is being taken for facilitation of taxpayers is the consent-based data sharing of the information which has been furnished or uploaded by the taxpayers on the common portal. This new provision is section 158A, which is an enabling provision for providing for consent-based sharing. That means the consent of the supplier or the taxpayer who is uploaded the information, as well as the consent of the recipient wherever any information is such which reveals the identity of the recipient. So in such case, this information sharing will be the other systems, and such systems will be notified separately. And the information sharing will be basically for the benefit of taxpayers. For example, for flow-based lending, if the information of invoices or e-invoices or GSTR1, etc. is required, which will facilitate the lenders to provide lending to such registered persons, or to help in bill discounting of invoice of such for such registered persons. So this is an enabling provision. Details will be provided in rules and the notifications, and this is for the benefit of the taxpayers. Next provision is regarding the place of supply of goods transportation services. So recently, when the notification for export of freight supplies it was withdrawn, then a lot of problems were noticed because due to place of supply of the service and the place of location of the recipient being different. This was due to a proviso to subsection 8 of section 12. And this this proviso was applicable in cases where supplier and recipients are both located in India, but the place of supply, the destination of goods was outside India. So in such cases, as per proviso, the place of supply was the destination of the goods, which was outside India, whereas the recipient was located in India. So there were issues regarding whether it should be IGST invoice or CGST, SGST invoice, and there were also issues regarding whether the ITC will be available or not. So for clarification on the issue, a circular was brought out recently by us, which specified that the ITC will be available to the recipient in such case. However, it was felt by GST Council that this proviso is not serving any purpose and only creating complications. So it was decided that this proviso may be deleted. So this has been introduced through Finance Bill. And now the place of supply of such goods transportation services in such cases where supplier and recipient are located in India will be independent of the destination of the goods. And thus, even though destination of goods may be outside India, the place of supply in respect of service where recipient is a registered person will be the location of the recipient. This will address resolving the issues or complexity arising out of different place of the place of supply being different from the location of the recipient. There is a streamlining of the provision of OIDR. In case of OIDR, there were two definitions, which was one is in relation to non-taxable online recipient under section 216 of IGST Act, and another was the definition of OIDR services itself under section 217 of IGST Act. In the definition of non-taxable online recipient, there was a condition that for the OIDR services to be taxable at the hand of the supplier based in non-taxable territory, the recipient, the unregistered recipient in India should have used this service for a purpose other than commerce, business, industry, or profession. Otherwise, it will be a RCM liability on the unregistered recipient. So it was decided that this is creating complication in operation of this service, taxability of this service. So this condition of for a purpose other than commerce, business, industry, or professions has been removed from the definition, and the definition has been simplified. Second amendment is being done in the definition of OIDR services. Here, the condition of the rendering of such supply being essentially automated and involving minimum human interface. This has been deleted because it was creating a lot of interpretational and legal issues and litigations. Clarification, simplification of these definitions will help in reducing litigation, will pave the way for smooth and effective implementation of OIDR provisions. Now I will just highlight some provisions which are for streamlining compliances. First is restriction in timeline to furnish return statements. Presently, there is no time limit for furnishing of return statements under GST Act. There is a requirement that there should be some finality to the return and statements and accounts. So it has been decided to restrict filing of return statements up to a maximum period of 3 years from due date of filing of the relevant return or statement. First, this will help in improving discipline in return filing and also help in finalization of assessment, scrutiny, audit proceedings in time-bound manner. Second was the impact on the system, because keeping the data live for unlimited time period puts excessive load on the server and may slow down the system's application. So keeping a time limit will help in improving system performance and improving user experience. Second amendment is to streamline interest provisions for delayed refunds. Presently, those interest for delayed refunds are provided under Section 56. Enabling provision has been provided in Section 56 to prescribe manner of computation of period of delay for calculation of interest on delayed refunds. The purpose is that any delay which is attributable on the part of applicant themselves will be excluded from the period of delay, and this will be prescribed through rules separately. Then there is a amendment in Section 17(5) through which a restriction has been imposed on availability of ITC in respects of goods or services which are used or intended to use for CSR for obligations under CSR of a taxpayer. So there were a lot of different interpretations on the issue. Different advance rulings were being given, whether it's for business purpose or non-business purpose, whether they are in nature of free gifts or not. And it was creating a lot of uncertainty for the taxpayers. So it was decided to align the provisions of GST with the income tax. As in income tax also, CSR expenditures are not considered as allowable deductions. So on the same pattern, it has been decided that to clarify in CGST Act also through amendment in Section 17(5) that input tax credit will not be available in respect of goods or services which are used for CSR activities. So this will clarify the doubts on the issue. As I mentioned, that Council has in principle given approval for supply of goods by unregistered persons and composition taxpayers through ECOs. So there was the present Section 122 present provisions do not specifically provide for any panel provisions where the contraventions are made by ECOs in respect of such supply by unregistered person and composition taxpayer. This section, subsection 1B, has been incorporated in inserted in Section 122 to provide for panel provisions if the contravention is done by ECOs in respect of such supplies. There is a small retrospective amendment in Section 23, which is just clarificatory in nature. The intention has always been like this only. So the Section 23 is being amended retrospectively with effect from 1st July to give overriding power to Section 23 over Section 22 and 24. So basically, these are the amendments in CGST Act, and they will come into effect when they will be notified in tune with the states and UTs. Thank you.
Thank you, sir. Thank you for a very eloquent presentation, clarifying. I hope after hearing your presentation, there won't be any doubts. But if there are any, we are going to take them up after the presentation by the panelists. And sir, with this, I would like to introduce our panelists for the day. Ms. Indra Anand is the group head taxation at Tata since August 2021. She is a qualified chartered accountant of 1994 batch. She co-chairs the Direct Tax Committee at the Bombay Chamber of Commerce and Industry and is also a member of the Indian Merchant Chamber. She specializes in direct tax compliances, representation, and litigation. She has considerable experience in representation before revenue authorities in tax assessment and appellate proceedings. With this brief introduction, I would invite Ms. Indra Anand to kindly come make her presentation. We have been hearing one side of the budget, the team which made them, the other side, tax, the companies, the trade, the industry, would like to hear their views. Indra Anandji, please.
A very good afternoon to the esteemed members today. Good afternoon to Madam Rama, Honorable Member Civic, Mr. Sanjay, Ms. Lima. Thank you for the presentation. And all my co-panelists. I would like to share the common feeling which the public in India is sharing today and visible all over. The budget which has been, everybody feels together with me that it's a very pragmatic budget which has been introduced by our Honorable Finance Minister. The proposals coming forward for the indirect tax are a boost to the Make in India concept which has been floating ever since. And this is just one more push before we enter into the first budget for our the new era, which we are calling about the India at 100. So when we are venturing into that, we see this as coming as a boost to the manufacturing sector. The proposals which are coming up for the reduced custom duty rates, the clarifications, the rationalization of the structure, it's a welcome step. Ease of doing business is again, as explained a little while ago, just gives boost to the industry. We welcome all of that. More importantly, the decriminalization of many of the offenses, the clarity which is coming, the cautious effect to avoid litigation helps by clarifying the intent, and more of such seminars and webinars to interact and to understand each other as to how this is going to come forward. With this, I would just like to add one bit here about the impact of the CSR spends when we are talking about not giving the input tax credit or rather blocking the credit on the CSR spend. Is it in some manner going to impact the CSR actually flowing into the society? Because if the input tax credit gets blocked here, perhaps it's eating away into the CSR, which is reaching the society. Also, we as a group have always believed in incurring something higher than the actual CSR mandated as per corporate law. So what happens to that input tax credit, which is over and above the mandate? Do you intend to block that credit as well? I think with this, I leave the floor open for my other co-panelists, not eating away much into their time. And thanks for this. Thank you very much.
Thank you. Thank you for such a brief, concise presentation and voicing your concern about CSR, which I'm sure after the panelists here, our team would like to answer on that. I would like to invite our next panelist for the day, Mr. Anant Ajaypath Singhania. He is the president IMC Mumbai, a fifth-generation industrialist, CEO of JK Enterprises. The firm belongs to the illustrious 135-year-old JK organization, which is owned and operated by the Singhania family. He is also a director in JK organization, Platinum Fashion Apparels Private Limited, and Subhash Silk Mills Limited. He is a commerce graduate, co-chair of the prestigious FICCI, a nominee on the boards of ASSOCHAM and Bombay Chamber of Commerce and Industry trade bodies, and executive committee member of the China-India Forum. He has been there earlier also on this forum of DGTS. I would invite Mr. Anant Ajaypat Singhania to kindly express his views. Mr. Singhania, please.
Thank you, Dr. Verma. A very good afternoon to Srimati Rama Matthew, Member Tax Policy CBIC, Ms. Limatula Yadin, Joint Secretary TRU, Sri Sanjay Mangal, Principal Commissioner GST Policy Wing, Dr. Rajesh Verma, Additional Director General, fellow panelists, ladies and gentlemen. It's my pleasure to interact with you on this platform in the role as the President of the IMC Chamber of Commerce and Industry at the discussions of the indirect proposals on the first budget of the Amrit Kal. Honorable Finance Minister Srimati Nirmala Sitharaman has set the foundation for over 6.5% GDP growth to take India from 10th to 5th in the last 9 years, and now from 5th to the top position in the next 10 to 15 years. Ma'am, India has chosen the theme of One Earth, One Family, and One Future for its presidency of the G20, which is commendable. Further, the Honorable Finance Minister has stated that the PAN shall be the common business identifier and shall become the tool for the unified filing process across India. Ma'am, in light of the above, we strongly feel that time has come to have one single GST number across India. In fact, I mentioned this to you when I met you a couple of months back in Mumbai. This will greatly reduce the compliance burden and unnecessary issues of overlapping jurisdictions. We have found in some cases that the same assessee is being assessed sometimes under the state, sometimes under the center in different states, leading to multiple audits and even differences in assessment and denial of input credit. Today, we are in the age of a digital transformation, and India is actually in the forefront of cutting edge technology. One India, one GST is the call of the day. This is very important for the growth of India and for reducing the compliance burden. Coming to the budget proposals, the move of extending the composite scheme of suppliers supplying goods through e-com operators is a much welcome move that will greatly benefit the SME players and reduce their compliance. More and more digital services and goods are being served on the e-com platform. Even one district, one product is another area where people can supply. The timely reduction of duties of inputs on the mobile phone industry, television industry, and several others that were shown in the presentation will go in a long way in enhancing India's competitive edge in the pursuit of an Atmanirbhar Bharat. The Make in India initiative is well received and will lead to great value addition in India. Ma'am, moving on to some of the demands of the industry. There's a denial of the credit of the recipient if the tax paid by the supplier after collection of the recipient remains an unresolved issue. The department, we believe the department has the machinery to ensure that the GST collected should be paid to the exchequer and not penalize the recipient. The second issue is quite an elaborate one, that is about the BIS requirements on imports. So there seems to be a lack of clarity on which items are covered and which are not covered. It is requested that the goods that are covered, which are not covered by the BIS requirements, must be incorporated into the customs EDI system, so that all the documents which are marked when subject to BIS verification can be properly done at the examination stage. Also, the list of items covered under the BIS requirement should be published and circulated to the trade and industry. At present, the customs examination officers are demanding the BIS certificate for items which are covered or not covered, which are imported. This leads to a lot of delay and unnecessarily compliance issues. The department several times insists on the certificate to be produced, and even sometimes there's a question of show cause notices and penalties. So request if you could please streamline this process so that the BIS certificates are issued in a time-bound manner, and it will definitely facilitate the EXIM industry. The third point is there are problems when there is mergers and acquisitions or reorganization or restructuring, which has now become the new norm. In some cases, we have found our members that the old GSTI numbers of the entity which has been exhumed is no longer valid, and the assessment orders cannot be updated because the new registration number is not valid for the old entity. So perhaps a solution can be looked at it. The next point is on the tax on the intermediary of the people who are exporting of services and earning foreign forex earnings, which needs to be considered favorably. The point which my colleague mentioned on the input tax on CSR activity is very important, because two things may happen. One is that the outgo of the company will go up, or in turn, the amount available for CSR will go down. So we believe that CSR is part of the business activity, and hence credit should be utilized for the output tax on business. And lastly, I must compliment the department for decriminalization of offences that have been reduced, as mentioned by Sanjay Mangalji and his address. And this has been well received by our members. With this, I leave it back to you. Thank you so much.
Thank you, Mr. Singhania, for a very elaborate presentation covering a large number of issues: one, GST, composite scheme, BIS requirements, decriminalization, and all. I hope our panel will be taking up some of these in the future course. Now, I'd like to invite Mr. Rakesh Gupta, VP and Group Head, Taxation, RPG Group. Mr. Rakesh Gupta is a chartered accountant and company secretary, having experience of more than 25 years in the direct and indirect taxes. He is working as Vice President and Group Head Taxation for the Indian conglomerate RPG Group, where he looks after the direct and indirect taxes of all the group companies, which include KEC International, CA, Zenzar, and a lot more. He's a regular speaker on various forums on tax-related matters. With this brief introduction, I would invite Mr. Rakesh Gupta to kindly give his views on the budget. And queries, doubts on whatever has been presented, they can also be taken up. Thank you.
Thank you, Mr. Verma, and thank you the entire CBSE and DGTS team for giving this opportunity to speaking on the budget. And it is very fascinating and very. I really appreciate the efforts of the authorities, of the policy makers to communicate and to give their views and explain the budget provisions from the policymakers. So with these comments, let me come directly on the current budget proposals. I completely echo the sentiments and views expressed by co-panelists regarding the welcome move on the rationalization of custom duty for protecting the domestic exports, boosting the protecting the domestic production and boosting the exports and green economy. There is a welcome move to decriminalization and compounding provisions. But sir, I would like to mention that even that 1 crore limit or 2 crore limit for criminalization of for any GST non-compliances is very, very low limit actually. Look at the size of the companies which we and the kind of contribution which is made by the large group like us actually. So this limit of 1 crore and 2 crore is still very meager amount, and I request that this limit may be relooked at. There is a as we have seen that in last couple of quarters, the GST collection has been robust, and it is more or less stable between 1.5 to 1.6 lakh crore. Even for the budget of the 23-24, government is expecting a very robust collection and tax buoyancy. So I think there is a room for the rationalization of GST rate. I was expecting that there will be some roadmap will be provided by Honorable Finance Minister for reducing the rate slab and consolidating the rates of 12% and 18%, and provide some roadmap for bringing the RNR rate of around 15-16%. There is also need for certain items which are in 28% bracket, like cement, and which are basic need for the infrastructure development to be to bring down to 18% or even lesser. So there is a means like a lot has been spoken about the GST credit mechanism. I think there is a need for reducing the rigors on the GST credit. Still, there are a lot of credit which is not allowed or which is restricted, and on top of that CSR expenditure credit. I think there is a need for to make the GST law completely flawless, and all expenses which are used for the purpose of business, credit should be allowed. There is a lot of issues, sir, ma'am, on the ground level on the GST audit front. There is a multiplicity of audit. There is multiplicity of same data being asked from the different authorities. I think there is a need for to rationalize that. I was expecting that budget will give some roadmap for the dispute resolution. There is a need for the creation of national advance ruling authority, and also need some clarity on the setup of the tribunal. So, but overall, I would say that budget is very, very progressive. Budget is very forward looking, and government thrust to simplifying the law is on the right path, and in the time to come, we should see more robust GST law. Thank you.
Thank you, Mr. Gupta. Changes happen, requirements or demands, well, they continue. Some of them are taken up in 1 year, some follow, because from the one side of the table, one cannot hear and understand what exactly are the requirements on the other side. And this platform is an attempt to bring all of us together to understand each other and to work towards the progress of the nation. And I am sure happy to hear the panelists overall appreciating the budget. It's good. Before I go on to the questions which have been put on the chat from the speakers, I would like to invite any of the speakers who would like to address the queries raised by the panelists before the chat box questions are taken up. Ma'am Rama, Lima, or Sanjay Mangal, sir, I would like to address any of the specific points raised by the panelists.
Okay, I will answer. I will start by. I think the common question is on the denial of the thing on the CSR. Sorry.
Yes, sir.
Corporate social responsibility. One must remember that under the company law, the corporate law, your CSR is actually supposed to be in an area which is not related to your primary area of business. And under income tax law, you're not eligible for taking set off on your CSR. So why you expect GST not to be aligned with that is something I have not understood. So it is merely an aligning of all the laws that this decision has been taken. If you have an issue with the way it has been aligned, I'm sorry, I cannot help you at this point. You can always make a representation, and the government can take it up. But this is the logic, thought process behind it. That is the one common one. The second common thread has been on the decriminalization portion. I think somebody has said something about, I think Mr. Rakesh Gupta said something about the amount being too low.
Yes.
Do appreciate that we have decriminalized a lot of offenses which are actually crimes. But because they're actually crimes under the IPC, we have decriminalized them under GST law. And when you talk about 2 crores or 3 crores GST, you're talking about a multiplier of at least five times in actual terms of business.
Business.
That is not a small amount, right? So that is, it can always be examined. I said you can always propose it, we can always examine, but the logic is very simple. That we are talking about a minimum of a 10 crore of actual
Turnover.
coverage involvement. The duty component is what we are discussing here. The duty component is the actual quantum of business which is not covered GST paid GST or not covered under the GST laws properly is much substantially larger. As far as the rationalization of the rates, the bigger problem which I think all of you are facing is regarding the rationalization of both the GSTN and audit. Unfortunately, because of the way GST is structured, and you have both the center and state administering GST, we have to find a via media, I agree, but it's not the solution without getting into constitutional issues on devolution between the center and the state. So we will look at it. We cannot, but I cannot say that I will be able to resolve it very quickly. Sanjay, would you want to add to that?
Yes, ma'am. I will just supplement on 2 or 3 issues which have been flagged. One is about CSR. You have mentioned yourself, ma'am, the logic behind it, which was also told, and it may affect some people, but it was for bringing clarity because the intention was like this only, always, and to avoid litigation in future, to bring clarity, this 17.5 amendment has been done. Otherwise, 17.5H was always there, which says that that any supply by way of gift or free of cost, ITC will not be available. So this was always there, but to bring clarity, this amendment is done. There is a question, I think, in chat box also and by one of the panelists about whether this the restriction on availment of ITC will only be there up to 2% limit, which is there under CSR Act, or it will be available even if the expenditure is beyond this 2% limit. So the thing is, up to 2% limit, there is an obligation under CSR. So there was a feeling that it is part of, it is in course of business. It is part of business because it is a statutory binding, statutory obligation of the taxpayer. So it has been clearly provided under law that this CSR will not be available if such expenditure is done even for this statutory obligation. Beyond 2%, anyway, if the supply is free of cost in form of a gift, then then as per section 17.5H, 5H, this ITC is not available on that free supply. Second, Mr. Singhania had raised this issue about denial of credit of the recipient if the supplier has not paid the tax on the same supply, and this is an issue which is there being faced by industry. But this is a prime requirement that tax should have been paid, and only then ITC should be available. This was creating a lot of issues how to comply with these provisions, and to ease the compliance of this, we have recently in December only we have brought out a new rule 37A, as per which we have provided that you can take credit even though your supplier has not paid tax on it, and if by the September of the next financial year, if the supplier has still not filed GSTR 3B for that particular month, then you can reverse the credit by November of the next financial year, even without payment of interest. If you will reverse the amount after November, then the interest will have to be paid. So from the data what we have seen, that this covers a minuscule portion of ITC. Most of the suppliers, they file their return by the September of next financial year. So only for a very small number, maybe 1-2% of the cases, this will come into play. That supplier has still not filed ITC, his return for the concerned financial year, and this will mainly arise only in those cases where supplier are all either fraud or they are fake or they have run away. Because otherwise, because of this requirement of sequential filing of return, which we have recently introduced, that you cannot file your next GSTR1 if you have not filed your previous GSTR3B. And similarly, you cannot file your next GSTR3B if you have not filed your GSTR1 of the same month. There is a much improved discipline in return filing. So this issue has been tackled, I think, to a very, very large extent. And the provision of 37A makes the compliance of this provision much, much easier. Third, I have already mentioned about the requirement, about the request for increasing the threshold for prosecution. Presently, we feel after a lot of discussion that this limit of 1 crore, if it is increased to 2 crore, it will address the problem to a large extent. As regards the cases which will still be liable for prosecution in case of larger companies, we are making compounding provisions more attractive by reducing the amount of minimum and maximum amount of compounding. So this will help in genuine taxpayers who by any chance have come into the provisions which are attracting prosecution. So they may resort to provisions of compounding. So I think these are the major concerns which have been addressed. And as regards other concerns about merger and acquisitions, if there are concerns, I will request Mr. Singhania to send a detailed representation so that we can examine the issue. And we can think about it. What can
we'll send it to you, sir.
Yeah, intermediary services, our circular was already there, which has resolved the issue to a large extent. But about your basic question, whether in case of intermediary service there should be taxation or not, this is a larger issue which will be tackled in due course. Thank you.
Okay.
I think the point was that it's towards export of services. And therefore,
yeah, Mr. Singhania, the issue is because in case of intermediary services, place of supply is in India. It does not remain covered under export of services. So there are demands that we should change the place of supply of intermediary services to the location of recipient. It has not been done because it's a continuation of the practice during the erstwhile service tax. So at present, it has been decided to continue with the same. Maybe in future course, there may be a relook. So we will keep that in consideration.
thank you.
Thank you.
Okay. I will address two of the questions which are related to the customs tariff amendments, which have been popped up in the chat box. One was regarding the change of classification of bituminous coal. This is essentially to because of the FTA, which is in Australia, and to align the classification in the two countries. And steam coal is, frankly speaking, is a dated term which ought to be taken out of the tariff. We will examine that. As far as whether more is applicable for capital goods, I'm not the correct person to answer that. I would refer it to the customs policy, and we will look at. They will examine and we have reply. It will not be proper on my part to respond to that at this particular stage without having it had examined. There is there's a somewhat unusual question, unexpected question, I would say, that's on the power of customs officers to enhance value. I am not sure what is the context of this question. Under the customs valuation rules, subject to certain conditions, the customs officer has always the power to enhance value or re-examine the value under which it is filed. So it will depend on the circumstances of the case about whether that particular enhancement, which has obviously triggered this question, is correct or not. I would suggest you take it up with the concerned local customs officer, and to resolve this question. As again, Mr. Singhania, you have raised a question of this uploading of BI certification and other documents. I will pass on this suggestion of yours to the customs and systems wing to see whether it can be included as a part of the documentation, which is now being permitted to be uploaded. I think it should be possible, but I will not. I'll pass on the suggestion to them for them to take a call. I think that those were the main questions. There is one question regarding changes in GSTR 7 to avoid litigation. I suggest Mr. Dhandaria, you please send a detailed request to the policy wing so that they can examine what are the changes which you're suggesting and whether they can actually be accommodated or not. And there is one question on notification 50 of 2017, serial number 404. This is a very complex question. Is Lima there? I think she might have left.
Yes, ma'am. She was telling that she has to brief the FM and she might have to leave early.
Yeah, I think
But
she has
we'll still
left.
check in. Lima, by any chance, if you're around?
No, I don't think she is. Petroleum operations taken under petroleum exploration licenses.
No, I'm still here.
Yes. So nice to have you, Lima.
Yeah, so the meeting got a little shifted, so I decided to still stay till the end.
There is one question, Lima. This on 50 of 2017, serial number 404.
Have we removed this entry? No, we have not removed this entry. I think the person who's made the question says we want to know whether this entry are revoked or suspended the budget. So we have not done anything to this entry.
Yeah. Thank you for that clarification.
That exactly is the advantage of having this particular webinar. On the very next day, the Honorable FMS presented the budget. Any doubts, any clarifications? I mean, we have it right now, right here, with the whole budget preparation team being interacting with the participants. Now we can go on to the next query.
There's only one query left, actually, Rajesh. That is on section 24 for inward supplies to GST under reverse mechanism. That is, it's a very simple, actually a very simple process.
I will respond to it.
I can clarify. It's a very simple question.
The query which is being made, that when we are making giving overriding effect to section 23, whether the people who are mandatorily required to be registered because of RCM liability on their inward supplies, though they are otherwise not required to take registration, whether they will still be required to take registration or not. I would like to clarify that as per section 9.3 and 9.4 of CGST Act, if there is a RCM liability on the recipient, then it is considered as if recipient is liable to pay duty on the same supply. So if that supply, as he becomes liable to pay duty on that supply, he is required to take mandatory registration, and this exemption provided by section 23(1) is not applicable to such persons. So these persons will still be required to take registration if there is a RCM liability on the said person.
And this one more question on the exempted turnover for reversal of ITC. With goods procured from inside India, outside India, supplied out of India without entering into India.
The query, as far as I could understand, is the query is about para 7 of schedule 3. This entry is considered neither supply of goods nor supply of service, and as it is neither considered as supply of goods nor supply of service, by virtue of explanation to subsection 3 of section 17, it is not covered under exempted supply for the purpose of reversal of ITC. So no reversal of ITC is required in respect of such activities or such value which constitutes the supply of goods from outside India to outside India. If this is the question, I think it should clarify the doubt.
Okay. So
then there was a question. I think Rajesh, you can have a look at the list of questions. One question was that section 62, if the person can files returns within 30 days, then the assessment order is considered to be withdrawn. So they have mentioned, as we have increased the time limit for filing returns to 3 years, whether this limit of 30 days under section 62 is also affected. So I would like to clarify that limit of 30 days under section 62 is not affected by this the timelines of 3 years for filing returns. As the filing of returns is an independent process, but whether the assessment order will be deemed to be withdrawn or not, this will be only if the return is filed within 30 days of the assessment order. So there is no contradiction and no challenge or conflict between the two clauses.
So we have addressed the queries related to CSR, ITC payment, prosecution, M&A, classification of coal, assessment. Well, it includes valuation and classification. That is what the customs officer is expected to do. And apart from that, let me see what other question is there. There are certain suggestions regarding form GSTR 7. Well, they can be taken up right now and during the course of this particular webinar. Any other?
No, this is a suggestion regarding the change in GSTR 7, the format itself, that we cannot discuss here.
Yes, that is, I think, something we can take up later.
Yeah.
But during this budget, Lima, you would like to say anything more than with regards to anything which has been said earlier to add on to in the view of the discussions here?
Oh, I just probably would want to say that the list of notifications that we are extending for 5 years, 2 years, or the entries, basically notification or standalone notifications, that we are extending for 2 years, 1 year, 5 years, or we are discontinuing with effect from 31st March is there in the pink book and my JSDO letter, which is uploaded on India Budget along with the budget documents. So the lists and the entries are readily available, so people can probably refer to that. Thank you.
So there's total transparency with regards to the total presentation and the provisions and everything is there on the website too, which the participants may like to refer. Those who have not been able to get a hold of it, they may try for it. And with this, any other queries, the panelists?
So, ma'am, Rakesh here.
Yeah.
Ma'am, regarding this CSR expenditure, since it is already mentioned that there are contradictory advance rulings on that, can it be clarified that at least this provision will be applicable prospectively at least for 17-18 till 22-23? The questions on the credit availability is not raised.
I think Rakeshi, it has already been answered by ma'am.
Yeah, both of us have answered it. That's 1 second.
Rakeshji, I think in my this thing I had clarified it that the view of department was always that it is not available because 17.5H is already covering it. Any supply by way of gift or free sample is not permissible for purpose of availment of ITC. It was only because of the conflicting advance ruling and to provide clarity that this amendment has been made. If there will be a need, we will clarify. But like presently, it does not appear to be any need. But if it is felt in future that there is a need to clarify, then we will definitely do.
Dr. Verma, may I?
Yeah, please.
Yeah. So, ma'am, I'm sorry to be repetitive, but industry is very keen for simplification of compliance, and therefore I once again mentioned the issue of one GST number. If you look at the income tax, with faceless, we moved away from the income tax being handled at your AO level to become a pan-India, your assessment could happen anywhere across the country. So keeping that in mind, and also, with the FM stand, Honorable Finance Minister stand of a common business identifier being the PAN, and, GST, again, the G20 theme, one earth, one future, one family. Why can't India have one number, that will go in a long way. So I'll just leave that request on the table. And if you could give some guidance, I mean, I think industry is willing to wait. If you could give a guidance, in these many years, we'll move to that.
Sorry, Mr. Singhani, actually, it will be very improper on my part to give you a response on this particular one. I do appreciate your concern. We have worked very, very hard on the service tax side to unify your processes. So, and the GST to go back to this distributed system which we are following now, I understand the concerns about it, but it is not a call. We will have to work on it through the council. We'll definitely examine what is possible. That's the only that is the only shall we say assurance that we can give. I would suggest you send it as a proposal for examination, and we will see what and we will definitely examine the possibilities. I do appreciate your concern. I can tell you that.
Thank you. We will
Both
send
in
it.
audit and in registration assessment practices, I do understand where we're coming from. It is we all appreciate that, but whether we have the solution with us is another question altogether.
Well, as all the participants would appreciate, the changes happen gradually. We over years, the GST, one nation, one tax came into existence, and this suggestion, visionary suggestion of yours, you can always send it as a proposal, and it can be examined. Regarding this particular budget, if there are any specific queries in terms of clarification or doubts, we can take that up, because we have been going on time. It's only 12:51 now. And this is one of those rare webinars where we are proceeding as per our planned time schedule. Usually we tend to get along, and there are delays with speakers taking on a lot more time than allocated, but this has been one of the rare ones. So anything related to this particular budget here, panelists or anybody else, in the chat box, if there are any further new question.
Mr. Chaurasia is going on a little about valuation. Mr. Chaurasia, I suggest you actually go and meet your local commissioner and get your problems sorted out. This is not a budget-related issue. It's not that I don't want to answer it, but it's customs valuation is a very elaborate process, and the circumstances under which it can happen is it's a very big subject by itself, or for a webinar by itself. I suggest you take it up with your local commissioner. If there's a problem, then you can then we will look at it. There's one more question which is coming regarding the bonded warehouses, duty-free shops, and more units regarding reversal of credit under 17(3). Sanjay, would you like to elaborate this one? This is exporter services.
I have not seen the exact question. One.
It's the last one. That is with the supplies from bonded warehouses, duty-free shops, and mover units. Which is also a bonded store, where input is removed as such as manufactured in the mover unit would separate reversal of credit under 17(3).
There are two amendments relating to it, which are there in the proposals of Finance Act. One is about the retrospective applicability of para 7, 8A and 8B of Schedule 3. Para 8A covers supply of any goods from warehouse, from the warehouse before their clearance from home consumption. There is an amendment in section 17(3). Explanation has been amended under section 17(3), wherever enabling provision has been taken, so as to specify a particular activity or transactions of para 8A, wherein it will be included in exempt supply, and therefore reversal will be required in respect of that supply. So what specific activity of para 8A will be prescribed, it will come only through rules. So it will not be appropriate for me to comment whether it will be required or whether the reversal will be required for any particular activity or not. As of now, till it is prescribed, all the activities which are covered in para 8A, for them no reversal is required, as per explanation to section 17(3).
I hope that solves the query. Mr. Rakesh Seni has raised another question. If you consider cement manufacturing company if they are using it for their personal consumption, whether they need to reverse ITC. let us not convert it into an issue where GST.
I don't think there is a clarity. If any item is being used for personal consumption, ITC is not allowed. I think it.
That would change the focus of this whole webinar. If you recall, I started off saying that this particular exercise is about what the changes are and how, if there are any doubts, then we clarify those, and those changes which can help the industry, our officers, if they have doubts, it's for that purpose. If you get into minor issues here and there, then the whole purpose of having this webinar, having the whole team, would be lost.
Some things.
I think, ma'am,
I think we should wind up now, if you don't mind.
Time to wind it off with the final words from you, and if there are any, ma'am. With you, the speakers and the panelists, we can ask for the final words before we provide a formal vote of thanks. Yes.
Yeah. The panelists would like to say something first? The other panelists?
I'd like to just compliment Madam and the entire team for a very exciting, interesting, and thought-provoking session. And thank you so much for addressing each of our concerns, both in the chat box and from the panelists. Greatly appreciate this. Thank you so much.
I take this opportunity to thank each and every one of you. Thanks the team entirely for making it so interactive and taking our queries so very responsibly, immediately, and answering across. Thank you so much.
Yes, so indeed it was a very, very pleasure to hear from the policymakers, and a lot of queries has been resolved, and a lot of doubts which was there in the mind has been resolved actually, and we have got some directions to from the policymakers. So thank you everyone for this opportunity.
Before Sanjay, the speakers, final word from speakers.
Thank you, Rajesh ji, and I will request all the panelists and everybody, if they have got any further queries, if they have got any further suggestion, they can send it to us so that we can examine, and if wherever required, we can issue clarification regarding that. Thanks for giving this opportunity for sharing this platform with everybody. Thank you.
Thank you. Lima? And finally, after that, I can request ma'am to say the final word. And
I can only thank the DGTS for organizing this, giving us a chance to interact with our officers and with the trade representatives, and of course, our other partners. So if there, like Sanjay Mangal sir said, we are always open. Our mail ID is already there. So please inbox us on any other queries. Thank you.
ma'am, please.
Thank you, Rajesh, for this opportunity. And thank you for being so interactive. The questions were all on point and they were very clear, and thank you also for largely sticking to the subject. I mean, we always have slightly tangential questions, but substantially we have stuck to stick to the concerns on hand. We do take your concerns on board. I would suggest, if you have on issues where you have real serious concern which are not addressed in the budget or in the policy, please do inbox us. Send us a detailed proposal. We will examine. We will take it up for examination. And thank you all so much.
Thank you, ma'am. And I would like to say thanks to the panelists also. They have stuck, and let us be on the target largely. And important thing is that for most of the trade, budget remains an enigmatic exercise which they think is shrouded in mystery or is covered up. So the team coming up, talking to the trade, talking to the chartered accountants, talking to the trade organizations, taking up their queries on the spot and trying to address them, and explaining the rationale, because many times people may not be aware of CSR, usme kyun dete hain, isme kyun nahi dete. So those things they can understand deeply the implications of that. With this, I would propose, I'll call upon my colleague Sanjay to speak, to say a vote of thanks, and also request all the trade who are there, if you feel it was good enough, on our DGTPS Twitter handle. Please express your opinion, and same on CBIC handle also, how this useful or this webinar has been. With this, Sanjay, for a formal vote of thanks, please.
Yes, sir. Very good afternoon to all. I'm audible. First of all, on behalf of DGTS Mumbai Zonal Unit, I extend my sincere thanks and gratitude to Honorable Member CBIC, Ms. V. Rama Matthew, Madam, for gracing us with her presence and sharing valuable insights with us. Thank you, ma'am. My sincere thanks to Sri Sanjay Mangal, sir, Principal Commissioner, GST Policy Week, CBIC. Thank you, sir, for sparing your valuable time and for giving an insightful presentation on the topic. Special thanks to Ms. Limatullah Yadav, ma'am, Joint Secretary, TRU, CBIC, for participating in this webinar and for giving such an informative and elaborate presentation on the topic. My heartfelt gratitude to all three panelists, Ms. Indra Anand, Group Head Tax, Tata Group, Sri Anand Singhania, President IMC Mumbai, and Sri Rakesh Gupta, EP and Group Head Tax, RPG Group, for participating and presenting their viewpoints on the topic. And last but not least, I express my sincere gratitude to Chief Commissioner, CGST, Mumbai Zone, and the CC office for extending their support and assistance in organizing this webinar. Now, with the kind permission of Madam Member Rama Matthew, ma'am, and Principal Commissioner Sri Sanjay Mangal, sir, and ADG, sir, I would like to bring this session to an end. Thank you all.
Thank you.
Thank you.
Thank you.
Thank you.